Welcome to a new update. Today we will be discussing everything we have got from the FOMC meeting yesterday evening, and we're going to discuss all the important data that's coming out as well today and tomorrow. Before we continue, make sure to hit the like button, subscribe to this YouTube channel, also check out our free trade ladder. Tomorrow it's altcoin setup time. You can find it in the description beneath, and we still have the 30% discount which you can use to join our platform, and then you can join the copy trading solution that we bring towards our clients. In order to be able to get that, you need to sign up through the link beneath, where you can find the 30% lifetime discount. It's valid until February the 10th. Now, when we're looking at the markets, we are looking at a case where there's lots of economic data. Yesterday I was making an update, but I forgot to tune on my microphone, so that's why we didn't receive any. But yesterday we've had the FOMC statement, which gave 25 pips, and Powell became a little bit more dovish than what we usually see from him, as he said that disinflation is gonna come. However, he states that he will continue to do the rate hikes in the coming period, as he expects to rally those still, which means that we probably are going to have a higher interest rate even during the year. And what we have been seeing on the markets is that the markets are not expecting Powell to continue with that policy, through which the markets have been rallying quite substantially, as even Bitcoin has been hitting a new yearly high. It hit 24.2k. And now we are correcting a little bit, so we have to see where we stand right now, as today is also a big day when it comes to tech earnings. Apple, Amazon and Google are coming in today, and tomorrow we've got unemployment data, which we also have received today. So what we see on the screen here is that we've got the non-farm employment change, which was a big miss. On the downside, we have been seeing that often already. It doesn't say anything yet, unless the coming months are going to show the same. Then we know that the unemployment is going to rally. We also received the PMI numbers, which is worse, but then job openings just made a significant beat here, in which the job openings are still doing relatively well, which suits a potential case of a soft landing of the markets. Ultimately, we are on the crossroad of a potential crisis or recession to take place. This will all be shown in 2023. Federal funds rate, 25 bips rate hike. And today we've got the case of Great Britain in the official bank statement. They have been hiking by 50 bips, and also Europe has been hiking by 50 bips here, and that ultimately results into a movement on the forex markets, which we'll be seeing shortly. Unemployment claims still low, still on the good side, which means that the labor market is still strong, which suits the Fed at this point. And tomorrow we get more data regarding this, as we can see with the unemployment rate, the non-farm employment change, and the average hourly earnings month to month. What do we see? We do see that the Nasdaq has been rallying since the previous data came out. The daily chart for the US 100, which is essentially the futures, have been seeing this massive run, as today we are up as well. If we go towards the regular Nasdaq, we can see that we are up 2% today, but there are some gaps beneath us, which is a tricky one. If we look at the 4-hour time frame, for instance, for the Nasdaq, we have closed the gap here, as you can see. So most likely there's a theory, or there is an argument to say that we're going to correct from here, which would be suiting the markets to correct as well, as we have a little bit of an overextended move to the upside when it comes to the reaction of Powell, as everybody's cheering around, which definitely is a little bit tricky at this point. The dollar started to drop massively yesterday. We have been marking this level at 101 points. And I said that was an important one to keep an eye on. And yes, we did. We dropped towards 101 points and rallied back up towards 102 at this point, which means that the euro has been correcting significantly and might be on the edge of a reversal here, which we could be seeing on all the markets at this point, as even gold is giving up all the profits we have been making the past day, which also means that we could be having an impact on the crypto markets, in which Bitcoin has been making a new high towards 24.2, currently at 23.6, and also starting to make a significant bearish divergence here, which is still not valid, but you have to keep a close eye. So it's kind of getting tricky to start looking for longs in this period here, as essentially altcoins have been rallying massively too. When we're looking at the 2-year yields, potentially bottoming out here. We have been seeing a drawdown yesterday, but now the markets are turning the tables a little bit, which means that probably the yields are going to rally from here if the unemployment data from tomorrow is becoming more positive than expected, because in that sense the Fed will probably continue to hike more than expected, which means that the 2-year yield will continue to rally at this point. Now, when we swap back towards Bitcoin, what can we see on the price action at this point? Volatility is crazy at this stage, in which we have got this support bounce at 22.4. We've got this rally in which we took out the high, and now we are rejecting at the previous high again, which ultimately results into further downside, in which I'm marking 23k as an important indicator to keep an eye on. We need to stay above 23k. If we do not hold 23k, we're going to correct back towards 21.2, and that is also suiting the rest of the markets in a sense that the DXY will probably continue this bounce and start an uptrend, through which the Nasdaq is going to correct from this point and starts dropping tomorrow in a significant way if the unemployment data comes in. Then also finally, we still have gold here, which essentially is showing us that a correction is on the horizon as it starts to fall off a cliff. We have been dropping from 1960 to 1920 already. And when we're looking at altcoins, these have been bouncing massively. As we can see here, for instance, Phantom is currently up to 61 cents. Parabolic run at this stage and getting into higher time frame resistance zones, and all across the markets we are going to get bearish divergences here, which ultimately could result into a fallback within the range. So when we're looking at the total market cap, if it loses the level at 1.03 trillion, we are going to drop towards the range again, and that could be giving us a guarantee that the bearish divergence starts to become valid and we're getting a longer correction at this point. That's the update for today. Make sure to hit the like button, subscribe to this YouTube channel, and I'll see you again tomorrow.